Welcome, everybody. It is party time. It is CPI day. We've been getting a lot of requests to bring our different contributors together. So today we are talking about the CPI, the FOMC, and all the great things that are going on with David Prince, who runs T3 Live's Inner Circle VTF, and JR Romero, who is the captain behind the Momentum Express VTF. So how are you guys doing today?
Very well.
Okay. All right. So let's get right into it. So, just before we start, everybody's in a good mood today. We got a bunch of positive comments in David's Inner Circle VTF. One person said most profitable day in 14 years. And then, of course, great to be back with JR, Nvidia, Cat, big winners. So obviously the big news, CPI was a little bit light today. Allegedly lower prices in used cars, gasoline, medical care, eating out. I don't know where that came from, but supposedly prices for eating out are going down. So, David, what was your reaction to the report?
My reaction was, wow, I talked about this a week ago, pre the NFP, and said to the Inner Circle, I truly see signs of a slowdown. I see it everywhere I look. I see it in the wealthier set, not just the middle class. I see it from housing. I see it in auto. And I don't know if it'll be reflected in the numbers, but I feel it. I was starting to get really bullish, IWM, and then we had that NFP report, which put that on hold. And I thought, should have stuck to my guts. But this morning we did talk about a plan pre CPI, because I said, listen, I know it's FOMC day, but this CPI matters, and it could be a huge market mover. So, hell, I was happy because it just gives you 8 million more ideas and things to do in the market. It ultimately means it's not just the Mag 7 market forevermore. So I was happy to see it. And yeah, there's more work to be done on housing specifically. But overall, this was the most friendly CPI in years, literally.
Okay. All right. Okay. So, JR, you've been steadfastly bullish for I don't know how long. I feel like every week I ask you the same question. Do you still like the market? And the answer is always yes. So what were your thoughts when you saw those numbers hit and the market take off?
I literally just unmuted my mic and said, somebody buy something. And we did. So what else are you going to do?
Okay. All right. So the big story today, at least when we're looking at the indices, is the IWM really taking off. Okay, David, do you think this is it for real this time? You know, for IWM, XBI also been lagging for quite a while. Do you think IWM can actually catch up?
Yes. So to quantify things, I said this morning, first off, I said, let's have a plan because that's how you trade better. And the plan was be long IWM on both a soft CPI and more specifically on a dovish Fed chairman. And then we talked further. Obviously, a lot of people are long IWM with me. But we started looking underneath at a lot of our positions. And if you look, first off, if you look at my Twitter, right, I'm sure it was just yesterday, it says the IWM does not tell you the story. There are several mid-small cap stocks that are leading in their own stealth bull markets. First Solar has been leading all of solar, and my baby, which I started long about 30 points ago, ENPH, has been like a rocket ship. Not First Solar like, but a rocket ship. ENVX, another small cap story, has been like a rocket ship. Snap, all of a sudden, has woken up the past couple days and has never gone beneath its earnings lows and continues to trade well. I can give you a million small cap stocks. CRISPR yesterday on the move. So there's an overall broadening of the market, even if the index doesn't reflect it. And today, now we're starting to see it reflect it. And I told Inner Circle, when's the last time you saw IWM, small caps, open like this and not pull back? You can't, I guarantee you can't find another time this year, 2024, where we gapped and went higher and did not pull back the same way. Maybe the Fed will change that. But my point is, I think it's real. And I also said to you here, right, and on Twitter a couple weeks ago, if there is a bull market left, it's got to come from something besides Nvidia and big cap tech. So I think it lasts. I think this is the real deal, that we'll have some legs. I wouldn't be shocked if we pull back a little bit. Maybe the Fed chairman won't let the market go to the moon. I don't want to monopolize the time, but yeah, I think it's real. We are up nearly 2-3% on the entire year in IWM. I think there's some real meat on the bone. If you look, last thing I want to say, if you look end of 23, that move we had in XBI and IWM, biotech and small cap, I think we now are allowed to have that type of move.
Okay. All right. So JR, I'll throw a similar question to you in a slightly different way. Do we have to broaden out? Because I don't know for how long we were hearing that it's all Nvidia, it's all Mag 7, blah, blah, blah. And here we are, and the SPX is up like 14% year to date. Does it matter if we broaden out, or is it just more important to be in the right stuff?
Depends on who you are. You know, if you're a Dow theorist, you're going to be obsessed with the Dow Jones Transportation Average and all the indices pointing in the right direction. If you're in fixed income, you're going to be obsessed about the Italy-Germany 10-year bond spread. You know, if you're in crypto, you live by the Sailor to Schiff ratio. I think it really just depends on who you are in the market. I don't really participate in the IWM. For me, it's been dead money since March of 2022. And, you know, I completely agree with what David's saying. It's just not particularly affecting my my performance this year. I don't care that we're going higher on lower market breadth. And I see all these people obsessed about it. And then I go, well, what do you trade? Well, you know, mostly Apple, Tesla, Nvidia. Okay. So, you know what I'm saying? And you're a day trader, right? Yeah. Okay. So for me, it's a lot of wasted energy. But I see solar really taking off. If we're really truly bound for a September, November cut, I think solar is going to outperform tremendously, and there's going to be amazing opportunities there. And that I agree completely.
Oh, okay. All right. So let's talk about some of the big boys in the market, and I think you can guess who. So Apple, you know, the other, what was it? Tuesday, everybody saying, you know, WWC was crap, not enough AI, blah, blah, blah. And then now Apple's looking at 217 plus. So David, is this an irrational move?
No. Like someone on the chat today said, it's up 14%. In a couple of days, it doesn't make sense to me. I said, who the hell cares? Like, seriously. But this has nothing to do with that. I actually spoke about the size of the potential move this weekend on Twitter. I said, listen, this is Apple. It's been in a 30-point range for a year. You're not going to get a better launching pad than that, right? It has missed the last 3-4 months of the bull market. What happens if it gets through that 200? So this is so much about a technical move. And I was also telling a buddy who's quite a sophisticated guy who didn't really see what I saw yesterday. He's like, oh, Apple. And I said, listen, do you think every fund just wants to buy Nvidia and Microsoft at all-time highs every day? Meta just bounced 100 points. Or do you think Apple, at least, whether you love the event or not, do you think Apple gave them a reason to rotate some money into an underperformer versus the other big cap tech stocks? That is a cash flow machine. That is only trading 30 times. It may be trading above its growth rate, but it's kind of the most dependable cash flow story in history. So it's kind of cheap if you look at it that way versus the rest of the market. So the point is, it's a technical move that had a base that was like so long, it's not even funny. And when the kind of leader of the market for so many years forms a base and breaks out, it goes. It doesn't go up like from 2 to 205. It goes. I thought it may go 215. I think it would go as high as 218. No, but I get the move. And that's what I think it's about. JR might have a just different perspective, but as long as the event wasn't a complete bona fide screw up, which I wasn't sure it wasn't. That's where I wasn't a great judge. The move itself was bound to happen as long as it got over 200. But, I mean, I think it's a lot of it is technical.
Okay, yeah. So, JR, so what do you think? So, JR, I've been watching Apple for like over 20 years, and it doesn't make any sense to me. So, what do you think of this lovely chart here?
Yeah. Well, first of all, you should get two guests that disagree on something in the future, because this is going to be a really boring talk. You asked me about Apple like 6 weeks ago or 4 weeks ago. I can't remember when you took over, and I told you Apple is the ipecac of finance. You don't like to drink the ipecac, but you do it for your own health, and it's a cash flow machine. It's basically a mutual fund. It's a giant financial institution, and I told you I thought it was bound to go higher. The measured move off the December lows, December 2022 lows to the July 2023 highs takes you to the top of the regression channel at 238.77. That's where I think Apple's going.
I will disagree with both of you guys slightly. I think Apple is almost a pharmaceutical company, because there are so many people out there that feel like they cannot live without an iPhone. So actually sort of a drug with some social approval attachment. Okay, so how about Nvidia? So David, Nvidia's at right around just made all-time highs, just went through the split. What do you think of Nvidia here?
I think it might be due a rest. I added that first dip of the split. I always said this, you might get some weakness that first day or two if they shake the tree, because a lot of people have added shares. I'll be aggressive buyer. Got lucky. It went down, I don't know, 4 or 5 points, was the equivalent of 40, 50 points. So 117s, I got to be a pretty aggressive buyer. I've trimmed a lot of that, and I'm sitting with it. As the market goes, it'll go. Do I think you go out and buy Nvidia here? No. I think there's better risk reward today. Now, I want to make it clear. Is it the market to some degree? Absolutely. Are earnings fantastic? Yes. Is it expensive versus its growth rate? No. I get all of that. I just think, given the size of the float now, there will be moments where there's some profit taking where you can find a better price. So it's a great hold. It is probably the most powerful story I've ever seen since I've been in the market. I got no problem saying that, because the earnings back it up. Every other story didn't really have the longevity with earnings. It was like JDSU or Cisco, and then there was like boom and bust. It's hard to imagine there's a bust here. Could there be a slowdown? Could there be oversupply one day? Could there be moments like that? Absolutely. But it's Nvidia, and right now the demand is as strong as ever and seems to be getting stronger. So I'm in it, and I'll be a buyer on dips like I always have. But my last buy was 8 points ago or 80 points ago, pre-split. So right here, it's just a hold for me, or a trim.
Okay, so JR, we've talked about so JR's been across the board bullish on Nvidia for I don't know how long. Every time I ask him what he likes long term, it's Nvidia. Now, like in ways, Nvidia is a cyclical stock. Like they go through booms and busts, and
not anymore.
I was about to say it was. Okay, I mean, technically, it's not.
Yeah.
Okay. All right. Okay. This is my exact point. So JR, since it feels like it's sort of unanimous that AI is the story and everybody's very comfortable projecting out multiple years of extreme growth, is there any danger that we are in a moment of euphoria with Nvidia?
Oh, we're in a moment of euphoria. The question is whether that euphoria is warranted or not. I don't, remember trading Cisco systems back in 1999, where the internet was imagined and projected. AI is here, and Nvidia is the Cisco systems of this decade. But look at
it trades at a third the multiple. So
exactly, that's what I'm saying.
Now is a little, insane. It's cheap.
It's cheap, exactly. It's
now that doesn't mean I buy it here. I'm only buying it. Sorry to interrupt, but technically, it doesn't resemble Cisco because that's why I said I've never seen a story like this that backs it up with earnings power.
Correct. You get to 113.50, 110, and I'm backing up the truck personally. You're going to hear the beep, beep. That'll be me.
Interesting. Okay. Okay. So it is time to get into the FOMC. So JR, I'll start with you on the FOMC. Did the CPI report and the reaction today, like, could it have robbed from any positives we could get from the FOMC?
The Bulls have stampeded the gates of Pamplona, and at this point, I don't see much Jerome Powell can do to tamp down this rally. I don't think the market's going to believe him.
Okay, David, do you agree that the Bears are just going to get stampeded?
No, but I think they've already been stampeded. Let's make it clear, right? I mean, unless someone just first got short today, they've been stampeded. So I think in reference to your question, can we go up like another 300 on NASDAQ today? Probably not, right? So yes, it robbed a little bit of the move, but more specifically to what JR was saying, I don't see us pulling back much. And specifically my plan, right, which is, we'll get into it later, but was, hey, if there is a pullback, I will be a buyer of small caps and IWM, which, by the way, JR, have barely been a focus for me all year, just individual ideas. I agree with you. It's been dead money, except XBI and IWM at a fairness for 2 months at the end of 23 were my largest positions when it was working. But most of the year, it's been big cap for me. But anyway, right now, it's a new year as far as I'm concerned, right? I could care less about the date. I just care about what's working, what gives me the best risk reward. So if there is a sell on the news simply because he reiterates things are in our favor, perhaps inflation is finally waning, perhaps there really can be 2 rate cuts, perhaps the dot plot is a bit more friendly than some are worried about, and we sell the news, I'll be a buyer. But my point is, I don't think even if he backs up what we saw today, meaning he's a dovish Fed chairman, I don't think we're just going straight up again. I agree with JR. We just may not have much of a pullback. We might just really hold these gains real well.
Okay, all right. I'm gonna ask you, both of you guys, a question, and you can tell me it's a stupid question and it doesn't matter because
it's so dumb. What a dumb question.
Because
yeah, you didn't say it.
Okay. Don't you wish people on TV would just say, okay, so consensus seems to be now 2 rate cuts in 2024. So, David, do you think that happens, or does it even matter?
Well, sometimes it doesn't matter because the wall of worry is enough, right? Like the answer, right? There's like a factual answer to this, funny enough. If you deal in facts, the answer is no. It doesn't matter because we haven't had any cuts, and originally there were supposed to be 7. So markets at highs, S&P is trading like 20-30% above its median average for the last couple decades. There's a factual answer. No, it doesn't matter. Now I get it. You're asking going forward. Yeah, I do think because there's a law of gravity that eventually, if we don't get cuts, we can't just go higher forever. But right now, the answer has been, like, the proof is no, it doesn't matter. The markets are fine climbing a wall of worry. Sometimes it's better than the actual facts themselves. I hope that made sense, but that's the way I view it.
Okay, JR, what do you think? How many rate cuts this year, or do you not want to answer it at all?
I've been telling you this for the past 6 months. It doesn't matter. Jeffrey Gundlach, Mohamed El-Arian, Bill Gross, they can't figure out the Fed, and this market continues to climb higher. I don't think it matters. I let the chart do the talking, okay? If the smartest people on the planet, as far as the bond market, can't figure out monetary policy, I'm not going to even try. I'm going to stick to my strength, which is reading the chart and reading market sentiment. last week we said, what's the chance the SPX doesn't hit 5,400 by the end of this week? And you said, you agreed with me, it's almost nil. And now we have a breakaway gap in the SPX off that cup and handle base. This is the beginning, in my opinion, of a secondary impulse move off that cup and handle. And like I told you, that measured move takes you to 5,700.
Okay, David, what do you think? Is 5,700? I mean, is 5,700 reasonable?
It's
by the end of the year, not tomorrow, Michael.
I think I need it by tomorrow.
So it's reasonable, but I think there'll be more chop. One of the first things I said today after the CPI is I said, do not go out and buy every big cap tech stock because you'll actually lose money. I said, what happened today is it gave a reprieve to certain stocks that were in a penalty box. Hell, one of the ugliest stocks out there is MDB. And this morning I said, oh, now there's an excuse to buy MDB. You're going to have a dead cat bounce. I think a bunch of people bought MDB on Inner Circle today and made a lot of money. So what happens when you broaden things out is you don't have to buy. And I mean, for a moment today, AMD was barely up. Amazon went negative. Meta was red. Thus, the S&P may not be a straight line because as things broaden out, we actually have more choices, right? So I don't disagree with it. I just think it's not going to happen the way people are accustomed because a lot of these big cap stocks that kind of hell, JPM's down $1.50 today. So yes, but not the way we're accustomed. I think when markets broaden out, you have to be cognizant that some of the same money is now being spread out, believe it or not, to ENVX and Zeta Interactive, and I'm talking my book, but you get the idea. So yes, but in a more intermittent up and down.
Okay. All right. So sorry. Go on, JR. Go on.
I'd just like to add that I think the two primary risks we're facing is geopolitical instability into the election, and also there's a lot of smart analysts are now talking again about the potential pressure on the regional banks from the secondary commercial real estate crisis, and that could really derail things and chop us out into the end of the year. So those things I think are elements we need to be really wary of.
Okay, all right. So JR, I think it's interesting you bring that up because I'm going to put my conspiracy hat back on for you.
Oh dear, here we go.
So one of my thoughts.
Does he do this with you also, David?
No, I
think he does.
No,
I'll probably tell him that I'm ignoring him. So
no, sometimes I have to put on my Tucker Carlson hat for JR. But I actually had a thought with the CPI hit. I was actually thinking, is the deep state putting the fix in for the election?
I'll be back in 10.
Oh God.
I'll go full Joe Rogan. I'm just asking questions.
The deep state loves their money more than you and I combined, David. Michael. Okay. I'm not sure that's the thing, bro.
Okay, all right. So
I wish there was tequila around me. I'd have a shot. Yeah, I'm not
there are interesting. There are certain members of our audience that love it when this stuff comes up. Okay, so let me let's rephrase it a little bit. So JR, we've talked a lot about how there are sort of I wouldn't say permanent, but there are sustaining forces that could keep inflation higher. Like, do you think CPI, at least as reported by the government, is going to trend down? Or again, does it not matter?
I think inflation is here to stay. It's incredibly sticky. And if you look at inflation on a year-over-year measure from 2021 and what people are paying for groceries, and you look at household debt versus credit card debt, we have some really big structural problems. Not to mention, we talked about the demographic shift in the workforce, and the retooling of the American supply chain away from China. Those are going to be deeply inflationary secular trends for the next decade. So the inflation battle is going to be an uphill battle. Encouraging signs today for sure. And again, I'm not an economist. I only play one on TV. But that's, if you're asking me, that's my position.
Okay, and and David, I'll throw the same thing to you. Is today's report one and done, or do you think it's part of a bigger trend?
I think it's part of a bigger trend, but this is going to sound weird, but it really is the exact same thing to me. You know how Apple had this huge breakout above 200 because it's base for so long? Well, we gave free money for so long, and the Fed desperately tried to create inflation for so long that once the genie gets out of the bottle, they can't put it back in. It's, like JR said, going to be a long time, and it's going to be sticky, and it could take years to get back down to where we were, if we're ever going back down there. I mean, like 2026 years. So I just think when you have a flat line of inflation, when the Fed is desperately trying to create growth, right, in the economy and can't get anywhere forever, right? We were a slow growth economy, and then inflation gets out of the bottle and goes, you can't just be like, oh, okay, the rates and we hiked it. And sometimes it can take a lot longer. The economy can slow down, and yet the inflation can remain on certain commodities and stuff we use every day. So I think it's a longer term problem, if you call it one, but it doesn't always mean the markets can't go up, because I think we're making headway finally. But it could be a couple of years of fighting it. So I guess we're probably in agreement. It's going to be a while till it's gone, per se.
Okay, all right. So let's get a little bit into short-term and longer-term outlooks and what you guys actually like. So, David, what do you think the chances are we extend further after the Fed at 2 p.m. today?
Maybe by a 0.5% from the highs of the day. I don't see as much. I think it'll be more about the details and what's underneath. In other words, maybe solar stocks, right? They were flying this morning. They pulled back a little bit. Maybe if he's dovish, they play some catch up or some recent losers. CRM is down today off of a downgrade removed from, I think it was Bank of America's US1 list. But I think things like that play catch up. I don't know if the market itself can just roar. Maybe financials, which were underperforming, play some comeback. Well, they're not really underperforming. It's more about Visa and MasterCard and JPM. So the indices themselves, I don't see us up 500-600 on the day. I see us it's more about churning, holding our gains, looking at stuff underneath in terms of individual ideas, which, by the way, has been my deal for, I don't know, the last 2 months, that the real gains aren't about the Qs the Qs have moved a lot, or the SPY, but it's really been about finding individual names that are having these massive, 50, 100, 200% moves. I mean, First Solar just went up literally almost 60% in a straight line in 5 weeks. So that's kind of my shtick right now, is less about the indices outside of IWM, which I think is going to work and continue to from here on in.
Okay, JR, what do you think? Can we power higher right off the FOMC today, or is all the juice out?
I think if we do, a lot of it will have to do with gamma exposure over 5450 in the ES. So the daily expected move on the for a 2 sigma move is 5479, and if you take the igniting move on the data this morning, tip to butt, and you take the measured move, it takes you to exactly 54.7825, which is pretty much the upper end of the 2 sigma move. So if we, if we start hitting 54.55, and I think they're going to turn the machines on and take you to 54.78.
Okay.
I think,
right.
but it's purely technical, right? Just in terms of gamma exposure, I think that the market pops on that.
Okay, all right. So let's talk a little bit more about, I guess, intermediate term. David, is there anything you're in right now that you like, say, over the next 3 months?
Yeah, and then I'm going to run, not to be rude, but I got to do a few things. So just because we're going long, but so a few things. I am a believer in small cap. If you look at Snap, it's been waking up. I think they had the best quarter they've had in about 2 or 3 years after disaster. I think the highs aren't in for the year. I think we'll take out recent highs. Zeta, another smaller name. I'm not a small cap guy. Dear friend of mine's the CEO. This is the second public company, David Steinberg. And if you look at the chart, that is looking special. I was really pretty loud on Twitter about buying any pullbacks. Morgan Stanley had a block. We recently bought the stock 16 and under at 17.50 today. Crossing its 21-day. I don't think the highs are in for the year, and I think it's a $20 stock. My focus this morning is, and I like to be the guy who tries to share stuff in front of the move, not after the fact. So on Twitter yesterday, I wrote, a couple young guns that I mentor mentioned Microsoft and how good the chart looks. And I looked at it, smelled it, and I was like, oh my God, this smells a little bit like Apple. It's not like going to go up 20 points, but big cap tech stock that's been in a range for 8, 12 weeks. This smells a little bit like Apple, like it can move. And even though I don't love big cap today, I think it's more of a small mid cap market. I think Microsoft's going to break out. Sure enough, we bought stock 435 and under. We bought the 440 calls. They've exploded this morning. And I think it'll continue to make new highs. It's having one of those nice breakouts after a real solid base of 12 weeks or so. That's some of what I'm looking at. Aggressive buyer of IWM on any dips. And I think biotech is going to extend its wings and play some catch up. If you look at one of my babies, Immunome, which obviously I was loud about at 7 or 8 and ran to 30 and has now calmed down, it formed a nice base, $13, $14, $15. It's trying to break out as well above the 15-day, 50-day, 16, 20-ish. It looks like it has room near term to 19. Some of what I am doing right now.
Okay, JR, what smells good to you out in the market? I mean, you've been very bullish on big cap tech and these AI names. What do you like now?
Like David, I love the solars. I think that a lot of these recent IPO bases are going to absolutely rip, whether they're fundamentally sound or not. Like IPO bases like Reddit. I mean, we go over a lot of IPO bases in the room.
That A-Lab. You guys trade that one?
Yeah. That's another great one. So in an environment where the market is making new highs off of a breakaway gap, I expect a lot of IPO bases with no overhead supply to really run, right? So I'll be looking at a lot of the IPO bases, and this is controversial. People don't like it when I say this.
Oh, Warren Kitty?
No, not that bad. Slow down, David. I think Tesla has been in an accumulation base here. I'm expecting a move back to 230. That's your declining tops line on the weekly and your weekly 200. I'm already long on the name, and I'm looking for a measured move off the head on that inverse head and shoulders back to the daily 200. So that's going to be a nice, 40, 50 point pop there, I think.
Wow. Tesla 230. That would be beautiful. Okay, I think that's a good note to close us out on. So, guys, we're going to do more of these group events where we bring on more contributors to talk together. So, do us a favor if you're watching on YouTube, hit the subscribe button and the like button.
Also, just a quick note: while Scott's not, perfectly healthy, I challenge him to a push-up contest. What do you think?
David, even you have no chance.
I figure if I get the guy down right after a major operation, I might have a chance. No, still no shot.
I won't name names. I've seen Scott destroy very in shape 25-year-olds.
Yeah, I'm sure he kicked my butt and it's to pieces. You're right.
Okay. All right, guys. Okay. All right, everybody. Thanks for joining, and we will be back. Thank you, David. Thank you, JR.
Bye, guys.
Take care, guys.